Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 29th of October. So the dollar is continuing to gather momentum because the odds of a Trump success in the US presidential election is increasing. And that has kind of weighed on the euro dollar today. As you can see, rates held at around 108.35 area, which was previously a support zone. This level has now turned into resistance, and the euro dollar is now pushing against this bullish trend line that has been in place since October of 2023. It has tested this trend line a couple of times in the past, and more recently on Wednesday of last week. So it's possible that we could see a breakdown if the odds of Trump winning the election increases, or if incoming data from the US top expectations this week. And we have plenty of data coming up this week, including the non-farm payrolls report on Friday. But the key event for the euro dollar, and indeed for the forex markets in general, is the US election next week, which will be followed by the Federal Reserve rate decision as well next week on Thursday, I think it is. So the euro dollar remains in a bearish path, and the selling pressure could increase should this bullish trend line break down. If it does break down at around 107.60 to 107.70 area, then that could pave the way for a potential drop to 107 handle next, which is likely to be the next level of support. Below that, we have the April low at 106 coming in right here, and should the momentum gather even more pace, then 105 even could be on the cards, but we'll cross that bridge if and when we get there. For now, the key question remains, will this bullish trend line break down? On the upside, resistance is seen at around 108.35, as I mentioned. Above that, 108.70 is a key level where we have the 200-day moving average converging with price. The pound also faces a very interesting next couple of weeks. We have UK budget coming up on Wednesday, followed by the jobs data from the US on Friday, in addition to all of the other economic data releases from the US, before the focus turns to the US elections, and then we have the rate decisions from both central banks next week as well. So ahead of all of that, the pound has been consolidating its recent losses, and it's continuing to hold above this bullish trend line that has been in place since September of 2022. This trend line could break down should we see further improvement in US data, or Trump is elected in the US presidential race. If that's the case, then we could see the cable break through this bullish trend line and possibly head down to the 200-day moving average within this key support area between 127.80-ish to 128.70-ish or thereabouts. So that's the next key downside target for me. On the upside, 130 is being tested right now, and it's kind of holding as resistance, as you can see by the wicks of these candles. Should rates break above this area, ideally on a daily closing basis, then that could pave the way for a short squeeze rally, possibly towards 130.50 initially. Then above that, we don't have much in terms of obvious resistance levels until 131.50 area. So that could be the next upside target in the event that rates break above 130 handle. Ahead of the US elections, we've seen the equity markets struggle for direction in the last couple of days. We've seen the small caps and the Dow Jones industrial average bearing the brunt of the sell-off, while the technology-heavy Nasdaq and the S&P 500 have held their own relatively well. The S&P 500 is rising inside this rising wedge, and if we break below the trend support of this pattern, then that could potentially pave the way for a short-term sell-off that could send the index down to possibly this area here at around 5,670, which was the high back in July. For the Dow, the key support area is at around 42,000, the shaded region, which is also where we have the bullish trend line coming into play. In terms of resistance, the area around 42,400 is an interesting area to watch, where we have the 21-day exponential moving average converging with prior support and resistance. A potential break above that area could potentially pave the way for some short squeeze rally. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.